D-Wave just had the most quantum computing quarter imaginable. The sales pipeline went vertical, revenue looked like it fell through a trapdoor, and the stock got punished for the weird part in between. This is D-Wave Quantum, ticker QBTS, first quarter 2026 for Earnings Unscripted, on May 12th, 2026. They sell quantum systems and cloud access, especially annealing machines for optimization. And now they're pushing into gate model quantum too.
Yeah, and the market reaction was blunt. The stock had an early pre-market pop, then reversed around the call and finished the regular session down about 7.6%, around 22.35. Investors looked at $2.9 million in revenue and basically said, no thank you.
Which is a little brutal because the other headline is bookings at $33.4 million. That's not a rounding error.
No, it is the quarter. Bookings were up 149% sequentially, and backlog, or RPO, went to $42.4 million, up 216% from Q4. But, and this is the whole tension, GAAP revenue was down 81% year over year because last year had a big system sale recognized, and this quarter didn't.
Tiny legal seatbelt before we get too excited. This is not financial advice, just our personal opinions and a dangerous amount of curiosity.
Exactly. And I don't have a clean street consensus in front of me, so I'm not going to manufacture a neat beat or miss. What we can say is EPS was negative 5 cents, net loss widened to $18.4 million, gross margin was 63.6%, down sharply from last year, and operating expenses jumped hard, mostly acquisition costs and people. So the company is selling future work faster, but the income statement still looks starved today.
So the market is reacting to the empty plate, and management is pointing to the pantry.
That is actually the cleanest version. The pantry includes a $20 million Advantage 2 system sale to Florida Atlantic University, plus a $10 million enterprise quantum computing as a service deal with a Fortune 100 customer. Those are real contracts, but hardware revenue recognition in quantum is slow. Site prep, installation, calibration, physical delivery, it doesn't become revenue just because someone signs the paper.
And then there's the $250 million acquisition of Quantum Circuits, which sounds like D-Wave saying, okay, fine, we won't just be the annealing company anymore.
Right. They bought their way into the gate model race with dual-rail qubits, and management is framing it as the only dual-platform quantum player. Ambitious, maybe necessary, but it also took cash and marketable securities down from $884.5 million to $588.4 million. Still a lot of liquidity, but the burn and the deal costs are not cosmetic.
The part I liked, weirdly, was the Shionogi story, quantum plus generative AI producing a tenfold increase in desirable drug-like molecules. That's the first time in this release where I thought, okay, a normal person can picture why this matters.
Yes, that is the good version of the story. Not quantum will change everything someday, but here is a pharmaceutical workflow where the search space is insane, and this hybrid method found better candidates. That is proof of use, not just physics cosplay.
Physics cosplay. Miro, you have been waiting all day to say that.
I have restraint. Limited, but real.
All right, so first impression, Wall Street hated the revenue optics, but the actual question is whether bookings can turn into recognized revenue without the cost base getting ridiculous.
That's it. The quarter is not clean, but it's interesting. And with D-Wave, interesting is usually where the accounting footnotes start biting.
Perfect. Let's get into the details because the timing gap between sold and earned is doing a lot of work here.
Yes.
Yeah, the timing gap is doing almost all the work, and I think it is easy to be either too cynical or too forgiving here. The CFO laid it out pretty plainly. He said, quote, "While we will recognize a significant portion of revenue upon the physical delivery of the system, we will recognize a smaller portion over time prior to delivery as installation and calibration progress." That is not hand-waving. That is the physics lab version of revenue accounting.
So the signing ceremony happens now, but the income statement waits until the machine is basically installed, calibrated, and behaving.
Right. If you treat the first quarter revenue line as demand, you are probably underrating them. But if you treat bookings as cash already earned, You are kidding yourself.
There's this funny human bit underneath it. Like someone at Florida Atlantic can be thrilled, but accounting is sitting there with a clipboard going, has the giant quantum machine finished settling into its new home?
Exactly. Quantum enthusiasm meets revenue recognition rules. Not a crowd pleaser, but it tells you what to watch. Management says a little over half of backlog should turn into revenue within 12 months. That becomes the scoreboard.
Because the promise becomes observable.
Yes, not quantum someday. Did the installations happen? Did calibration clear? Did recognized revenue show up in the second half? That is the difference between backlog being a pipeline and backlog being a museum plaque.
A very expensive plaque.
Very! And there is concentration risk. The Florida Atlantic deal is a massive chunk of bookings. That does not make it low quality, but it means the shape of demand is still lumpy. One campus deal can make a quarter look heroic, then the next quarter looks empty unless the next system is ready.
That's the part investors hate, right? They want software-like smoothness from a business that is still moving hardware through real buildings and real procurement departments.
Correct. And the Fortune 100 QCAAS contract is interesting because that is closer to the smoother model. But one contract does not magically make the whole company SaaS. It just shows the direction.
Okay, but let's go to the less flattering half, because even if the backlog is real, the cost base just got heavier, and not politely heavier.
Yeah, this is where I get less romantic. Operating cash flow used almost $45 million in the quarter. CapEx was small, so this is not we built a factory burn. It is operating structure, acquisition integration, people, sales comp. The company is carrying the cost of becoming bigger before revenue proves it can carry that cost.
And the net loss looked, I don't want to say better, but less terrifying because of the tax benefit.
Exactly. The reported net loss was $18 million-ish, but it included a $28.5 million income tax benefit tied to the Quantum Circuits acquisition. Strip that out conceptually, and the operating picture is much uglier, not because they hid it, to be fair, it's in the filing, but headlines won't always separate core economics from acquisition accounting.
So no victory lap on profitability. That's an accounting cushion, not the business suddenly finding religion.
That's the phrase, and the balance sheet now has a lot of acquired story in it. Goodwill, intangibles. Cash is still substantial, so they're not in immediate oxygen mask territory, but they paid real cash for Quantum Circuits, and the assets added are partly future belief.
Future belief with qubits attached?
Right, yes. Which is maybe the official industry unit of measurement?
The acquisition itself is fascinating, though, because strategically, this is D-Wave saying, we're not going to let the market box us into annealing as a niche.
Right, and this is the other layer. Annealing gives them near-term use cases, optimization, sampling, hybrid AI. Gate model gives them legitimacy in the broader quantum race. The dual-rail pitch is basically, we can have superconducting speed with better error detection. CEO Alan Barrett's used this very colorful analogy. Bicycles, propeller planes, and then dual rail as a jet airplane.
Which is either brilliant investor communication or the beginning of a quantum-themed airport brochure.
Both can be true, but the milestones are far out. 175 physical qubit system by 2028, 100 logical qubits by 2032. That is not next quarter's revenue story. That is a long technology option they just bought.
So investors are being asked to hold two ideas at once. One, the current annealing business may finally be getting real enterprise traction. Two, the big acquisition is a multi-year science project with a balance sheet price tag.
Yes, and management knows skepticism is high. Barrett's opened with that Linus Torvalds line, talk is cheap, show me the code. I actually liked that because in quantum, there's almost too much theater. But if you invoke show me the code, then the burden shifts back to you.
Meaning, show me the conversions, show me the installations, show me that Shionagi-style use case becoming more than a nice case study.
Exactly. And maybe show me you can pick fights with NVIDIA over Ising terminology without it becoming the main character. The CEO saying, I'm not entirely sure why they picked that name, is funny, but the market will care more about whether customers pay and systems ship.
Still,
I enjoy a little quantum vocabulary policing. It keeps the earnings call spicy.
Sure. Just do it after the cash flow table.
That is the most Miro sentence imaginable.
It's branding, apparently.
So the deep read is, D-Wave did not have a normal bad quarter. It had a quarter where the accounting screen and the commercial reality are badly out of sync.
Yes, with one caution. Out of sync can resolve in two ways. Revenue catches up to backlog, and the quarter looks misunderstood, or costs keep compounding, installations slip, and the booking story loses credibility. The next couple of quarters tell us which universe we're in.
Right. So then the real question becomes, as we look ahead, what would make investors trust the pantry instead of staring at the empty plate?
By making the pantry produce dinner, basically, not vibes, revenue. Management is guiding Q2 revenue to be up modestly from Q1 with a substantial portion of the year pushed into the second half. So, okay, the test is very visible now.
Right, because modestly up from 2.9 million is not the victory lap. The second half has to carry the story.
Exactly, and they've said 54% of backlog should convert within 12 months. That is the number I'd circle. If that starts moving, investors may forgive the ugly optics. If it doesn't, then the bookings narrative starts to feel overly aromatic.
Overly aromatic, like quantum soup left on the stove.
Not my worst metaphor. Also, Barat said, quote, I have a very high degree of confidence that we'll see 2 or 3 sales this year and that they'll deliver 2 systems this year. That is a confident statement. It is also now a hostage to execution.
And that's where I land too. I don't think this is a fake story. The contracts matter, the use cases are getting more concrete, but this is still a company asking public market investors to tolerate hardware timing, acquisition digestion, and science project timelines all at once.
Yes, and with nearly $600 million in cash and investments, they have room. But room is not permission to burn casually. The next quarter needs discipline, not just ambition with better nouns.
Quantum ambition does have excellent nouns.
It does. Terrible cash flow profile, excellent nouns. So, the outlook is cautiously intrigued.
That feels right. D-Wave has given investors something real to watch, not just something mystical to believe in. But now the burden is on delivery.
Show the installs, convert the backlog, keep costs from sprinting ahead of the business. That's the episode.
Beautifully blunt. All right, we'll leave the financial bit there. Thanks for listening, everyone, and maybe go be kind to your nearest revenue recognition accountant.
They suffer quietly. Goodbye, everyone.
If you'd like these earnings drops to just appear when a company reports, following the show is the easiest little habit to set. And just as a plain language note, Earnings Unscripted is made with AI-assisted research, writing, and voice tools. For each episode, the company release and call transcript are the factual spine. If you've got feedback or a ticker request, send it to earningsunscripted@datamadness.ca. Thanks for listening, and we'll see you on the next one.